Breaking news coming out in about the past hour as we're hearing with the Fed announcement, U.S. markets are going to be shifting. This is going to be directly impacting the U.S. economy and your wallets. Let's go ahead and take a look at the headlines so that way you can see it for yourself. Federal Reserve cuts interest rates. For the first time in Donald Trump's terms, we are hearing that this is unfolding right now in just about the past hour. Federal Reserve lowers interest rates by 0.25 percentage points in the first cut since December. We're hearing things are shifting. Mortgage interest rates just fell to a 3-year low. Here's why and what to do now. Mortgage, crypto, bonds. Here's how consumers may benefit from lower interest rates. And take a look. You can see the breaking news across the red part of the top of the screen here. You're going to see it coming out that the Fed has approved a 0.25-point interest rate cut and sees 2 more coming this year. So there is more forecasted on the horizon. We're hearing the U.S. economy is changing. I'm going to dive into all the details. You can see this updated just 3 minutes ago with the breaking news coming out. U.S. economy is shifting. For the first time, we're seeing rate cuts in Donald Trump's second term as President of the United States. We're going to be discussing all the details. I'm going to read for you the articles, and we're going to talk about how this could be impacting you directly. Now, before we dive in, do me a quick favor. If you appreciate the breaking news updates on how this is going to be impacting our wallets, take a quick second, hit that thumbs up like button for me. I'm going to be putting the articles on the screen, reading right from them. They're hyperlinked in the description, so you can click them, go see them for yourself with this breaking news announcement that has come out just in the past hour from the Federal Reserve. Now, in addition to that, to stay up to date on everything, and I know there is a lot going on right now. We're discussing global conflicts, the economy, earthquakes that seem to be happening left and right, assassinations that are taking place. To stay up to speed on everything, it is totally free. All you got to do is take a quick second, hit that subscribe button. I will keep you up to speed on everything. But let's go ahead and dive right in. Hit the like button, subscribe. Let's take a look at what has been unfolding here in just the past hour. So it says Federal Reserve cuts interest rates for the first time in Donald Trump's terms. And if you are happy with the way that Donald Trump has been handling the U.S. as the President of the United States, drop a 47 in the comments for support for Donald Trump. Let's take a look at this article that just came out here. It says the Federal Reserve cut its key interest rate by a 0.25 point on Wednesday today, its first reduction since December, and signaled it expects 2 more cuts this year as concern grows about the slowing labor market. Now, the move lowered the Fed's benchmark short-term rate to about 4.1% from 4.3%. Chairman Jerome Powell and other officials had held rates steady earlier this year while assessing the impacts of tariffs, immigration policy, and other Trump administration measures on inflation and growth. Now, on Tuesday, President Donald Trump said Federal Reserve officials have to make their own choice, but added that they should listen to smart people like me. He has argued the Fed should slash rates by 3 percentage points. Now, with hiring nearly stalled and unemployment edging higher, the Fed said downside risks to employment have risen. Officials noted inflation remains slightly above 2% target, but shifted focus to supporting jobs, saying lower rates could ease borrowing costs for households and businesses. Now, policymakers projected 2 additional cuts in 2025, so we're going to be seeing more of this, and one in 2026. Fewer than investors had anticipated. The decision passed with one dissent from Trump appointee Stephen Myron, who pushed for a large half-point cut. So we had heard somebody had said we need to get a 50 basis point cut to get done. But we're hearing 25 has been approved just in about the past hour. And take a look, Federal Reserve lowers the interest rates by 0.25 percentages. Now, what does that mean for mortgage rates, for bonds, for crypto? Let's take a look at this article here from Forbes, and then in a second, we're going to be diving into more detail about how this might directly impact the U.S. economy. Now, top line, the Federal Reserve on Wednesday opted to ease interest rates for the first time in months, leading the way for potentially lower mortgage rates, bond yields, and likely boost cryptocurrency over the coming weeks. Now, here's the key facts. The central bank's policymaker panel voted this week to lower interest rates, which have sat between 4.25 and 4.5% since December, to a new range of 4% to 4.25. Mortgage rates tend to fall before and during a period of interest rate cuts. The average 30-year fixed rate mortgage dropped to 6.35% from 6.5 last week, the lowest level since October of 2024. Mortgage buyer Freddie Mac reported. Borrowing costs in the 15-year rate mortgage also dropped from 5.5 to 5.5 from 5.6, and they neared a year-ago rate of 5.27. Now, when the Federal Reserve lowered the funds rate to between 0 to 0.25 percentages during the pandemic, 30-year mortgage rates hit record lows between 2.7 and 3% by the end of 2020, according to data published by Freddie Mac. Consumers who refinanced their mortgages back in 2020 saved about $5.3 billion annually as rates dropped, according to Consumer Financial Protection Bureau. Similarly, mortgage rates spiked around 7% as interest rates were hiked in 2022 and 2023, though mortgage rates appeared to react within weeks of the Fed opting to raise rates. Now, how do the Treasury bonds respond to lower interest rates? Now, long-term Treasury yields are more directly influenced by interest rates, as lower rates tend to result in lower yields. When the Fed pushed rates to near zero during the pandemic, 10-year Treasury yields fell to an all-time low of 0.5%. As yields for Treasury notes declined, the cost of borrowing also decreased for consumers, leading to likely lower rates on borrowing for credit cards, businesses, vehicle purchases, among other loans. We're going to get into the details of this. This is going to be directly impacting the American people with what we're hearing is coming. Now, cryptocurrency benefits from lower interest rates. Cryptocurrencies may be boosted by lower rates as Americans favor riskier assets, while bonds and savings accounts yield less. The price of Bitcoin surged during the pandemic as interest rates fell, rising from about $5,000 in March of 2020 to around $69,000 by November of 2021. In 2018, as the Fed opted for rate hikes, the value of Bitcoin fell from around $20,000 to roughly $3,000. It's unclear whether new rate cuts would send cryptocurrencies higher. However, as Bitcoin, Ethereum, and other popular tokens have surged to record highs in recent months, as the broader industry has benefited from looser regulations under the Trump administration. So we're going to be seeing where we go from here. But you can see the breaking news. The Fed has approved this quarter-point interest rate cut, and we see two more coming this year and one coming in 2026. So we're going to be seeing where we go from here. Now, are you glad to hear this economic change is taking place? If so, put yes in the comments. If no, put no. Let me know your thoughts, but let's dive a little bit more into what we can expect here with a special guest. And joining us now is Kevin Demerit, the CEO of Lear Capital, and he's going to be discussing with us what's unfolding right now and where things are likely going to be heading with the U.S. economy. Kevin, thank you so much for joining us today.
Well, thank you for having me back, Steve.
Yeah, I wanted to ask first, the Fed is expected to announce 25 basis point cut today, actually probably right now while we're speaking. Why do you think the Fed is choosing to do this move right now?
Well, I think they're seeing the economy is starting to slow down. I think their biggest fear is stagflation. Inflation is still higher than they would like, and the economy is not growing at the speed that they thought it was. I mean, these job reports have come out and been revised downward to a dramatic degree. And I think they were relying on that information to make their decisions. And now that those have been revised down, they know they need to get ahead of this and get the economy moving back up. Stagflation is the worst situation that an economy can be in. So stagflation is basically where the economy isn't growing very fast, but inflation is still very high or fairly high. So what does that do? It prohibits you from lowering interest rates because of inflation, and you need to lower interest rates to help spur the economy all at the same time. So they get caught in a trap. If they lower the quarter of a point today, that will help things out a little bit. But I have spoken to a lot of people about the economy lately, and I don't know too many people who don't think we're actually in a recession or very close to one already.
Now, some are predicting that there could be as many as 2 more rate cuts by the end of the year. I've seen reports coming out on this just recently. What would that signal about the state of the economy?
Well, if there's no political pressure, trying to get rates down for a reason other than, the things that the Fed looks at, which is the growth of the economy and employment, and the inflation rate, then that would signal that the economy is worse off than anybody thought it would have been. And President Trump would have been right to say, hey, we need to lower interest rates a lot faster than what Powell was thinking about. So that's what's going to signal. I think it would scare a lot of the markets because I don't think anybody expects anything other than about a 0.5 point this year. I mean, that's what most of the market believes we'll get 0.5%. If you start getting a little bit more than that, then everybody knows the economy's worse off than we thought.
Yeah, and actually, I saw that too, that they said the Senate banking chairman has floated the idea of a 50 basis point cut. Would you say that's an unusual move right now, or do you think that might be what we need?
Look, I think 1/4 point is okay right now. You don't have to go meeting to meeting to lower interest rates. So they can lower interest rates again anytime they'd like. So I think 1/4 point this time, see what it does over the next couple of months. It's more of a confidence thing because that 1/4 point's not going to make its way through the economy in 2 or 3 months. But from a confidence standpoint, it might help people feel a little bit more confident about the economy and allow consumers to spend and so on and so forth. So I think if you get a 0.5 point today, it's an overreaction. I think you're going to get the negative of what that would imply, which is the value of the dollar completely falls off a cliff. That's what I think would happen because from a foreign standpoint, they've been selling U.S. dollars over the past couple of years, and that would accelerate it, in my opinion, to a large degree.
Now, you had mentioned political pressure. How much pressure do you think that the Feds are facing right now? We had heard that Trump had predicted big rates coming. What are your thoughts on that?
Well, look, he's a very, he loves to talk about things, and he's right about a lot of things that people don't think he's right about. He may be right about the interest rate cuts. I think he wants them cut faster because he believes that that will help the economy. But look, there's always the other side to the coin. Like I say, I think if you start cutting interest rates too quickly, the value of the dollar is going to fall. There's going to be more inflation here in the United States, and it doesn't get the effect that you would think if you go a little bit too fast. There's going to be some positives that come from it, but there's a lot more negatives if you get it wrong.
Now, in regards to that effect that the American people would feel, that trickle-down effect, how do you think this is going to be impacting Americans directly, with these rate cuts?
Yeah, look, I mean, it's a big question to answer because falling interest rates are like a trap for your wallet, right? When the Federal Reserve cuts interest rates, it sounds nice at first, but you get cheaper borrowing, you get easier mortgages, more liquidity. But there's always a catch. Your savings account, your CDs, your bonds start paying next to nothing or lower and lower. So that safe cash cushion that people have built up suddenly bleeds value because inflation starts creeping back in, and it's already higher than where the Fed would like to see it now. So over time, your money just quietly erodes. So what happens in that instance? Investors get pushed into risk, right? They start looking for other types of investments. The safe returns are gone. They're forced to chase riskier investments and stay ahead of inflation. This means, piling into stocks or crypto or speculative type of investments out there, where a single downturn can just literally wipe you out, which is typically what happens. You look at the market today and it looks just like a bubble, right? It looks like I'm back in 2008 with just different assets in bubbles. It looks more like the dot-coms of the early 2000s. So these rate cuts are like oxygen for these bubbles. Asset prices start to inflate artificially because all this cheap money makes everything look, fairly affordable, tech stocks, housing, so on and so forth. But again, you could potentially get this 2008 scenario. So to kind of wrap it all up for you, retirement, in my opinion, if inflation is high and you start lowering interest rates, it's just your savings in retirement, the rate cuts are a nightmare. You got pensions and 401k plans that depend on these steady returns from bonds and these balanced investments. And if you lower the rates, those fund managers have to chase risk when the markets are, down, and your retirement starts to evaporate, right? Either from inflation or because the bubble popped. So rate cuts can feel like, free candy today, but tomorrow they're a sugar crash that wrecks your whole financial health. And you just have to be careful, because just one too many interest rates, where you lower interest rates just a little too much, and you're on one side of the coin. And if you don't lower them, then the recession hits and you're on the other side of the coin. So it's a they walk a tight rope, the Federal Reserve, and they got to get it right. And if there's political pressure and they get it wrong, there's consequences on either side.
So with that, do you think that the Fed is risking fueling some serious inflation right now with these moves? Or from what you see, do you think that we've really got the inflation under control and this is the right move right now?
We do not have inflation under control. Inflation is very, very hard. Once it starts, it's very hard to keep under control. That's why Powell has been very, very conservative on any kind of rate decrease. In the past here, he understands the history of inflation. And the real problem here, Steve, is that when you understand inflation, it isn't just here in the United States. There are trillions of dollars outside of the United States that countries hold in their central banks. And if you start lowering interest rates and inflation is fairly high, those countries are going to start selling at a more accelerated pace. You and I have talked about this. Central banks have been selling those treasuries and they've been replacing it with gold, and that's why gold's at record highs already. This interest rate decrease, if those countries don't want to hold those dollars, they sell those dollars and they're going to replace it with gold. Now, so that makes gold a decent investment possibly today. What does it do to the dollars here in the United States? The definition of inflation is too much money chasing too few goods. If you have foreign countries liquidating dollars, those dollars come back to the United States and cause inflation. Okay, the value of the dollar falls because those dollars were held outside and they weren't into the system. But you put them in the system now, and the value of the dollar falls. It's no different than when the Fed creates all this debt. For every dollar they create, the value of our dollar falls a little bit. It would be the same thing. If foreign countries are holding a bunch of Apple stock, $1 trillion worth of Apple stock, or $500 billion, and they said, hey, look, the iPhone isn't working out, and they all started to sell, the value of Apple stock would fall. It's the same with the dollar. That's the part people don't get when you get these interest rate decreases, that foreign countries don't want to hold it and they want to swap to something else that will hold the value.
So in this current economic environment, would you say that the people that are holding their cash, their money in, these traditional accounts are in trouble of getting crushed essentially?
Well, if you think that the stocks are fairly valued today, I don't, but if you do, that's fine. Or whoever's listening, then no problem. Keep on purchasing some risky stocks and or riskier type assets. If you think real estate is fairly valued and all those kinds of things, I don't, and I don't think lowering interest rates are going to keep them there. I think that they always come back to their mean, and so there's a lot of bubbles out there. We just have to be careful about them and make sure that you don't get trapped, which means diversification. I can't tell you which one's going to be the best investment, but I can tell you diversification works, and everybody understands don't put all your eggs in one basket. So to answer the question a little bit more simply is diversify your portfolio at this time, because we really can't tell what's going to happen and if they're going to get this rate decrease right or not.
Now, I want to shift gears a little bit here. Alongside of the rate cuts that we're seeing happening right now, we've also seen a lot of rising tensions globally with Russia, Iran, China, the United States, NATO. How do the geopolitical tensions risk right now our situation with the economy, stability here at home?
Well, look, I don't think there's I can't remember in my lifetime, I'm 60, where geopolitical conflicts, crises, uncertainty were good for markets. I mean, you don't even have to have a war. You could have terrorism like 9/11 and the markets are going to react. Another war breaks out, especially with somebody like China, or conflict, or the tariff basically call it a war going on with us in China. If that doesn't get resolved to somewhat of a degree that people feel is equitable and fair, then the markets are going to have some sort of a reaction. It's not going to be a positive reaction, obviously. It's going to be a negative reaction. And based on where values are today, it could be a bigger reaction than most people expect.
Now, in your view, are the markets underestimating the risks of the global conflict right now, or do you think they've already priced it in?
With markets, I don't think they price in global conflict. It either happens or it doesn't happen. It's almost like a black swan event. Nobody saw the 2008 real estate. Well, I guess a couple of people did and became billionaires, but most people are not anticipating something like that inside of their portfolio. And if they do, they're called professional or smart investors, and they diversify. So it's just diversification that gets you there. It's not, hey, I'm going to do something in my portfolio because I think there could be a war. Nobody's really preparing for that. The insurance is the diversification part of the portfolio.
Right. Now, anybody that's interested in diversifying their portfolio into gold and silver, Lear Capital actually has a special opportunity right now for anybody listening, right?
Yep. On your program, we do two things. We're going to give away a free special report. That special report is called The Dollar and Debt, and it goes over the interest rate situation where we are now, a couple of different scenarios so people can kind of, think about, here's a scenario one if they get it wrong. Here's a scenario if they get it right. What does that do to the value of the precious metals market? What does that do to the value of other types of investments and alternative investments out there? So all of that is free of charge. And then anyone who calls or goes to the website, which is learram.com, will also get a $500 credit added to their account. They cannot use it to purchase precious metals, but they can use it for any shipping cost and insurance. It's a precious metal, so going through the mail gets a little expensive. So we're going to help cover that. And then any of your IRA fees. So if you had an existing IRA and you wanted to move a portion over to precious metals, there's some fees to do that. That $500 will cover that for your first year or beyond. So we add that in. But what I want to tell people is if they call, we don't know you came from this program. If you go to the URL, we will. So just mention, Steve Ram when you call, and we're happy to put the $500 in there and, get you started on the right foot.
Thank you for making that available to us today. Really appreciate it. Kevin DeMeritt, CEO of Lear Capital, covering the rate cuts that we should be seeing today and what might be coming. Thank you so much for joining us today. Appreciate it a ton.
You bet. Thanks for having me, Steve.
There you have it, you guys. So that was Kevin DeMeritt. Thank you for joining us. And also just wanted to mention yet again the breaking news that Federal Reserve cuts interest rates for the first time in Donald Trump's term. We have seen a 0.25 percentage point. Now, this is the first since December, and we are hearing more is on the way. Mortgage interest rates have fallen to a 3-year low, and we've covered for you cryptos, bonds, mortgages, what's happening. And like I said, we're hearing 2 more are on the way this year and another one in 2026. So, man, let me know. Are you glad to see things shifting in our U.S. economy? If you're glad to see it, drop a 47 in the comments. We're hearing Donald Trump said that Jerome Powell should listen to smart people. He said, like himself, they need to cut it down significantly. And he is saying that right now, that is the track we are on. So if you are glad to see this, like I said, drop a 47 in the comments. Also, if you haven't done so yet, please take a second. Hit that like button, subscribe to stay up to date. I'll keep you up to speed on all the breaking news as it comes out. But that is the latest, you guys. Thank you so much for joining me, and I'll catch you in the next one. Take care. God bless.